All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Interesting day in the market here today. Once again, we see overnight futures traders getting hammered. That kind of bought the market up into some of the highs. But it has been a day in the market where it's been all downhill. There hasn't been a buy period, here in the market today. We saw it open up right here, and it's just been all downhill all day. All selling. There really just hasn't been buying. And you look at most stocks, there's not been any buying going in on those stocks, right? You look at some of the stocks that are up the most, the Apples of the world. Right there's a headline now. Apple, blah blah blah. Great thing. It got bought for about 5 minutes, and it's been all sell all day. You look at something like a Micron, same thing. It's been, first little bit, all sell all day. And look, we can put any ticker in here. We're going to see about the same thing. Bank of America, it's been pretty much all sell all day. JP Morgan, same thing. Goldman Sachs, same thing. You look at FedEx, same thing. Adobe, same thing. Just some stocks to a different degree. And sorry about that. Adobe, not the same thing. It's about where it opened. It's had a little bit of a different price action there to it. But, about 80% of the stocks out there, they've all kind of had the same thing here today with the market, and just kind of with this kind of gap up, initial bought and steady bleed here throughout the rest of the day. Now, that creates for some pretty interesting candles, right? Something like a FedEx, pretty dramatic candle here in the chart, and there are a lot of these candles out there all over the place in the market. And is it a foreshadower of things to come? Is it a harbinger of doom? Is it now time for the bears to run? Well, it could be. It sure could be. But when you look at the metrics, there's really not a lot of change in the metrics here today. You look at the bullish percent index, it's actually improved today. You look at small caps, the ratio is not exactly changing a whole lot. It's lagging a little today after leading really big the last 2 days. You look at transports, and, they're kind of doing the same thing. Everything up in near kind of this short-term resistance area. So, definitely have to be careful of that. If we come in and we just look at the sector breakdown here in the market, you can see tech leading, financial second, discretionary. It's a bullish stack, right? It is a bullish stack. Energy and industrials have really faded off throughout the day here today. Things like Caterpillar, which opened high and sold off. Now, we talked about, what this summer would be like, how this summer is going to play out, and that the reality is this summer there's a lot of known. It's not a lot of unknown. And I know everybody likes to talk about, man, who knows about this and nobody knows about that and all. But the big money, they know what's going on. They understand where valuations are. They understand what's happening economically, right? It's very clear. How some of the players act could create disruptions in all of that. But the big money is in a position where they're willing to buy dips. Then they're not as willing to chase into rips, right? If you're a big fund manager out there, did the fact that U.S. President and Chinese Premier change your opinion on Caterpillar here at 136? No, it doesn't, right? It doesn't change the valuation component. It doesn't change the fact that it's a little bit overcooked here. And we are seeing, some of that larger money more taking things off the table than adding to them when we look at most names out there in the market. It's one of those days here today, right? And this doesn't influence the challenge at all. And I talked about it this morning, possibility of reversal. The reversal today has been a bleed. It hasn't been a sharp sell. With some individual stocks, it's been a little sharper, but the overall component has been a bleed. And that can change here into the close, right? That could change. It can change pretty abruptly. But as we see it here so far, that's what it has been. Do I want to be an owner of Caterpillar calls going into the close? I don't, right? I don't want to own that chart. I don't want to be an owner of FedEx, into the close here today with some of these charts. Absolutely don't want anything to do with them. Would I be overly surprised to see those stocks go up tomorrow in a big way? Not at all. I wouldn't be surprised at all to see that. There's a lot of opinion out there circulating. I know, okay, yes, we had the trade talk this weekend. That was supposed to, give a clue as to which way everything was now going to go. And surprisingly, it didn't, right? Yes, I'm being sarcastic there. But, this is just about individual stocks. This is about individual signals, individual setups. Let the noise happen. The noise is going to be noisy. It always is during the summer. And, trade what you see and run with it. And, that's what I'll continue to do here for the challenge. Personally, I'm a little light, I'm a little light on things. And, I'm kind of not a huge fan of some of the price action in a few things, but it's not something where, I'm jumping in and buying puts on everything I see because of today's price action. I don't see that as, as paying. And that could change tomorrow morning. We could see some news or something of that nature. But let's go take a look at the challenge here in two positions, American Airlines and Bank of America. Bank of America option here, 209. So that's come down here from, where we got out this morning. But sitting there at 209. And American Airlines, sorry about that screen there. American Airlines is sitting here at... hey, we're up $30 since the open. What a ripping moving trade here with American. Airline fun here, but we're up a whole $30 on it, so pretty much negative by the time we count commissions. Now, American Airlines, it's not at its stop level, it's not at its profit level. Its auto exit date is tomorrow morning, so if the option is red tomorrow morning, I will have to take that off and move on. Bank of America, we made the adjustments here to it this morning, so the new data for the adjustments is in here, and the stop is 28.96 is the stop level. So you know what? That's about 35 cents away. That's not that far away right now. So that could come in, by tomorrow morning, possibly, if things sell off. But hopefully that's going to keep us from, riding it back down to the beginning into, that original stop, which was right down here. So we do have that stop bumped up very nicely to help protect us there. Okay. Now there is, this morning I showed some of the crossovers that happened out there, and there is a bullish signal coming into play here right now, and that is with Disney. And Disney's up about $1.40 here today. You can see the 3-7 crossover action on it. We have the 3-day moving up above the 7-day. We're in the higher side of its trading range here with Disney with that fresh bullish crossover. So I'm going to go out and buy some Disney. And let's go take a look at what that's going to look like here. We've traded Disney before here in this challenge. This will be the second time we've traded Disney. And going to come into the options, and if you look the August, the ones that are kind of 30 days out, 32 days out, the spreads on them are a little high. I don't want anything to do with those spreads. We go out to the 9th of August, spreads are still pretty high. The spreads come in significantly when we get into just the regular August monthlies, and these do not have earnings, with them. So don't have to worry about that. Been looking and go, okay, do we go with the 140s? Do we go with the 145s? The easy answer here is the 140s. It's a little kind of, it's about a 10% delta for a dollar move in the stock, so it's not a huge move there. But let's see, gonna go out and buy 8 contracts here of Disney, and that'll be about $4,000 here into the trade. So let's see if it'll go fill me here at 485, and looks like it didn't. Let's see here. Cancel. Oh, yep, there you go. It filled me there at 485. So the 16th of August calls on Disney, going for 485. All right. So ticker DIS. I'm just making sure the alert's out here. 8 contracts for 485. And this is, it is the 16th of August. 16th of August, 140 calls. Right. And again, I have no plan to hold it till the 16th of August. We're not going out to this option because of, time of wanting to hold it. We could be in this for 3 days. We could be in for 5. We could be in it for fewer. It has everything to do with the risk reward on the options and playing, the signal appropriately here for the challenge. But let's go get things filled in. 7:01 p.m. is our entry date here, and let's see. It looks like the order went out. So the 16th of August. 140 calls, and the price on these 485. All right, on 8 contracts. So there we are. There we are with that. Stock entry price was 141.04 when we got in. 141.04, and the average true range here on it is 236. So we'll pop that ATR in there. And now we can get our stock exit level. Going to be 138.68. Our stock profit level 145.76. And let me make sure that's right. That is. And then the current stock price, and again, delayed 20 minutes, as I always say. Disney there. And so that puts our auto exit date 3 days from today. And the 4th is a holiday, so this will be Friday afternoon, so 7:05 p.m. All right, and then the profit time stop is 7:09 p.m. All right, so there we are. We are into Disney. We are filled out on the spreadsheet, and this is the most cash we've put into a trade, here so far with Disney. And off and rolling. Okay. All right. Just double checking everything here. Making sure I get the thumbs up. All right. And the alert is out and off and rolling. Okay. Now, again, and you hear me repeat this, and I will continue to repeat this. The way that trades are signaled and run, it's something where please do not extrapolate what's going on with the challenge with what you expect, with what you think I expect the market to do, or what I expect to happen in the market. The market is not a factor when it comes to any of these signals, any of these trades. You'll notice we got into Under Armour on a day where the market was kind of ugly. There was no sign that it was turning around. And, Under Armour worked out pretty darn well. We got into CSX when the market was looking pretty good. CSX didn't work out, right? It's one where these are based, or these stocks or these trades and signals are based on the individual stock, the individual price action within that stock, and nothing to do with the overall market and the news and the swirling of the headlines and the fears and the angst of the entire market there. Okay. All right, so we're off and rolling. I think this is the first time we've been in 3 trades at once, if I'm not mistaken. I think we've been in 2 at once, but I think this is the first time we've been in 3 at once. Granted, Bank of America has been trimmed here, but I do believe this is the first time we've been in 3 so far this challenge. All right, let me put in the signal, Disney bullish here, and that should be updated. Okay. All right. So I gave you some initial thoughts on today's price action here in the market. Obviously, things can change and be altered as as things go forward. There's some charts I just find to be really interesting. We saw AT&T last week in kind of this slow motion breakout here above 33. This is a stock we've been talking about for a while from an investor standpoint, and the fact that you can sit on this stock, and we've talked about it since this time last year. You can sit on this stock. Yes, it may go down, it may chop up, but you have a fantastic dividend, and the chances of seeing this stock get sold off aggressively are very slim because of the level of the dividend up there over 6%. And we heard people talking, well, the HBO deal or DirecTV, and there's this problem and there's that problem, and yeah, they have problems, they have issues, they have things going on, right? There's a lot to worry about when it comes to AT&T, but all of that pretty much priced in. None of the upside of all of that has been priced in when it comes to AT&T. And, some of the breakout we saw last week is finally starting to price some of that in. So we have kind of a major longer-term breakout going on with AT&T. The price action on the stock's been like most other stocks out there today. But one that's on the trading algorithm. The radar or the watch list for the challenge hasn't triggered here at all. But from an investment side, still in a very nice position. At a stock that I would not be surprised to see trade up into the 40s as we go forward throughout this year and next, and getting it back to its kind of normal dividend area. Let me pull it up here. But one of the things you can look at whenever you're dealing with dividend stocks, and you say, well, okay, when do I get out? How long can this thing run? You can just come in and look at the dividend. Sorry, I wasn't signed in here, but you can just come in and look at the dividend and the yield on that, and just compare it to its history. AT&T, its dividend right now is 6%, right? At the best of times, when the stock has made big surges, the dividend yield has gone down to 4.5%. Right? That's when the stock's been toppy. When investors aren't willing to be big buyers of the stock. When we're down there at 4.5%, we're nowhere close to 4.5%. Right, the stock can push up into the 40s, and that's what it would take to get down here into this 4.5% area. So still a very nice long-term setup with some of that long-term breakout. Please, if you're thinking about short-term options, okay, there's no signal like that on them, but there will be chops and pops and drops. Use the drops in AT&T to get in. Just never really pays to chase AT&T, but we have seen AT&T actually outperform Verizon now for a little while, and that is a big change. That's a change that we have seen Verizon be the big outperformer for quite some time, but over the last 6 months, we are seeing the performance metric between the two stocks differ. And with AT&T really taking the reins, taking the lead on that performance metric here. Okay. Want to take a look at FXI here. Was asked about it, and my thoughts here on the FXI, and I mentioned this on Friday. This is the way to me to play. Any upside you think may result from the meeting between U.S. President Trump and the Chinese premier. This is the way to get in. This is the way to play it. But outside of that, right? Great, gapped up, fine. You take it and you go. Outside of that, there's nothing there that I'm excited about. It's not a great risk-reward scenario. It's not something where I think the meeting this weekend changed the long-term trajectory or changed the perception of it. And something where, now today, because of what it's done, you can do, other things. To me, that trade is done. That came in, it's over, and it's one where if you want to be buying into the FXI, you got to find a good risk reward area, and for me, there just isn't one in it, and I think that's the case with a lot of stocks out there today, right? We can even take something like Bank of America, which I have for the challenge, right? And you'll notice I don't share my opinion on these trades, right? I am not sitting there with Bank of America going, well, should I buy some? Should I sell some? What should I do with it? I wonder if I should do this. This pullback, man, maybe I can add some more. I don't look at it that way. I don't ask those questions at all. I'm running with the algorithm, running with the ATR method and the sorting methods, and running with that. Why? Because that's what puts the odds in my favor. With something like a Bank of America, is there a great risk-reward setup right here? No. There just isn't, right? I can't go out and say, well, I'm going to buy calls with a stop at this level and say, well, there's a really good stop level based on the chart. Or buy puts and say, well, I'm going to use this level. I mean, I could use today's high, but that's not really a good risk-reward scenario, right? So for many stocks out there, it's a day where today's action has not created solid risk-reward scenarios. What today's action has done is it has, deflated a lot of option values. Now, not to where they were this morning, but we have seen that kind of next push down here into the VIX. I do believe if we start to see the VIX trade below 14 here this week, that the chase for 3,000 is on. Anything above 14, it's still a little bit more of a coin toss here when it comes to the VIX. But we have seen some of that come into play here. But even something like a FedEx, which I'm very bearish on, right? Very grisly when it comes to FedEx. I think there's a shot that this even goes to double digits. Is it a good risk reward scenario for me to buy puts right here today? No, not at all. Not at all, right? If I play it just from a candlestick perspective, 168.02 is my stop point. Well, the stock's at 162 right now, so that's about $6 away. That's a little much, right? When it comes to just most of the action out there today, there just really isn't a really nice risk-reward type of setup. Last stock I'll take a look at here is Boeing. Now, Boeing, we traded for the challenge. We got in right here, popped, and then knocked us out of the rest that we had out of our time stop. And, looked like it wanted to keep on going up, and it's pulled on back. Me personally wanting to be a buyer of Boeing. Great, let it pull on back, and maybe the next 3.7 upside, triggers. But we now have some 3.7 downside. But there's some news on Boeing here today. Some news that they, essentially committed fraud when it came to some documentation of airplanes, and that's a pretty harsh. What's the right word here? Sorry. My apologies. The word is just absolutely not coming to me. But it's just a pretty heavy accusation here when it comes to Boeing. And we see Boeing, pushing on lower, pushing back on down into this 355 area. It's not one that is triggered bearish here on the algorithm with this 3-7 downside setup. The consolidation risk is pretty high. If it were to kind of drop into the 340 area, the chances of it triggering bullish on the next move up would be very slim. But if it's able to hold here and stabilize here for 4 or 5 days and then start to have a 3-7 crossover, the chances of being able to play Boeing back higher would be very good. They would be very good. But, it's not anywhere close right here today. It's not a great risk-reward scenario like most stocks out there, and it's just kind of one of those setups where, you know what? If yes, to see it drop to 340 here this week, sure, but to see it sit at 360 tomorrow, easily, right? And so you have to take that into account if you're going to go and trade it, if you're going to go and buy it, just that risk is out there, and, just understand what you're going to do if things kind of hit into those risk levels. All right? Thanks for hopping on. Have yourselves a fantastic evening. Remember, full market day tomorrow, and the market is a half day on Wednesday. Now, with the market closing at 1 o'clock Eastern and the afternoon session typically happening at 2:30 Eastern, obviously have to adjust that. And so we'll be doing the normal in the morning. Okay, we'll be doing just as normal. We'll be on video making challenge alterations here an hour after the market opens. And then it'll be, 2 hours later, I'll be back on, and that will be for the close 30 minutes before the market closes. So we'll still have an AM and a PM session. It'll just we'll just do the PM session 30 minutes before the market closes instead of the typical 90 minutes before the market closes. Again, thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.